Greetings all, Benny from East West, wishing you a very happy 2024. I hope it's prosperous and safe for you and your loved ones. We're going to take a look at uranium here, as we do every week. So I think this week I'm going to look at Energy Fuels and CCJ, because they're the ones that are showing some interesting stuff. So with that said, let's get into it. So just going to start off here with Energy Fuels. So let's just have a think about what this has done through 2023. So, this one didn't quite perform the same as some more of the pure uranium trades. We only managed to rally 15.5% from when we opened here in January to where we shut. So even though, we've deviated a long way away from the open and the close, we certainly finished on a weaker note here in Energy Fuels, and obviously this week has seen another reasonably heavy selling week. And so we've got to sort of think about Energy Fuels in terms of, it's not, as it's been pointed out to me in some of the comments, which I think are very valid, it's not a pure uranium play. There's also some rare earth factors that come into play. So I thought what I might do here is just look at some of the correlations. Now I think just looking at these correlation coefficients, what's been interesting is that we've been negatively correlated here to the spot uranium trust, which I think is probably, if you're just thinking about pure uranium plays, obviously we've been moving in a negative fashion, so in a negative correlation. But they're looking here, I'm just looking here at the correlation between the VanEck rare earth ETF, which we'll look at in a sec. But obviously you can see here, as we've come down through here, the positive correlation between these two have built. And then, of course, we got this nasty little gap here, which that came about because the CFO of Energy Fuels resigned, and obviously the market didn't take that very well, and it has yet to recover. But the correlation, the positive correlation to the VanEck rare earth ETF has broken down a little bit. Obviously, it was suffering quite badly under the weight of the rare earth market in general as we came down through here. So let's just look quickly at the VanEck rare earth ETF. And so obviously here you don't need to be a rocket scientist to figure out that we're in a pretty severe downtrend. Now we sort of, we were slopping away very badly through the latter half of 2023, and we were really out of balance. But just coming into the end here, we've come back to balance. We're just sitting here on this Tenkan, but you can see here there's just a lot of room before we can get sort of even to test this trend, to get above the cloud. There's a fair bit to go. And then obviously we would like to see the RSI build, even though, you could say here that we do have, I could probably maybe even go in here and maybe do a bit of Wyckoff to see if we've got a bit of a accumulation event going on here, which maybe I'll look at that in a future video, but that could be a bit of a spring there. So this kind of looks promising, but obviously we've had a very sort of deep retracement off our sort of COVID low, and we've come back, almost sort of 70%. We've gone well through the retracement zone that you'd hope to hold, but we're showing a little bit of gumption here, so it remains to be seen. But the correlation has broken down a little bit. So what is Energy Fuels going to correlate to more strongly going forward? Well, it looked to me like it'll be a mix of this sort of thing, which is really heavily dragging it down. And just the pure uranium plays that we can see. So, the mixture of those two things, I think that's just what I'd keep an eye on at the moment. So, obviously we want to see both these things rallying strongly, and then that's going to, help Energy Fuels to sort of escape the downtrend that it's currently in. So just looking here at Energy Fuels on a weekly, we are getting pretty close to the bottom of the cloud. I think I pointed out before, the danger with this one is that there was always a lot of room through here for the market to come back down. But we do have, a pretty thin cloud here. So it does remain in danger of slipping further through. You wouldn't want to see this broken. but hopefully it can just, even if it just finds this cloud and holds, and then as we go forward, the cloud sort of thickens up. So if the market can just maintain above there, that's great. But obviously the problem on the flip side is if we start getting below this, then this becomes, you know, a point that the market is likely to resist. Now, looking at the RSI, we are getting close to the bottom of the, where I would say is the danger zone. You know, if the market slips through this cloud and starts coming down to test this stuff, then I would think that the RSI is going to get below this danger line, and that would just consolidate that we're not pushing out of this sort of bearish trend anytime soon. But that remains to be seen. But we do have a continuation of the RSI dribbling off, which just shows us that the bearish momentum of the market is building. Okay, so that I don't look at this as an overbought or an oversold signal. I'm just looking at the, you know, the cycles as of bullishness and bearishness, and obviously, you know, if this can hold down here, then, you know, I would then and even get some divergence coming up the other way, then, you know, then we could say that the bullish cycle of correction is over, and that, you know, we've got a bit more room to move to the upside. But the MACD is, you know, we had this crossover a few weeks ago in the MACD, and, you know, we continue this downward move. So, you know, the indicators aren't really showing us much bullish at the moment. We'll just keep an eye on this. We'll just see what happens. But you know, generally overall, I'm watching this cloud. The indicators are telling me that there is a test coming up, and the thinness of it is not too conducive to heavy support. I'll just put it that way. Now, also on the ADX, we had this bearish crossover. So now that the directional movement index for the negative directional movement index, the red line, is now above that positive directional movement index, but the trend is still weak. So there hasn't been enough of this downward momentum yet to shift the ADX back up, because the ADX could, you know, if price keeps falling, it just means that the bearish trend is strengthening, and the ADX will turn back up to tell us that we've got a reasonably well entrenched bearish trend going on. So we haven't seen that yet, but obviously, you know, the next few weeks is going to be pretty crucial here. So this would be, to my mind, the overall bear trend that's still in play. So, you know, we sort of had this swing, we've had this sort of smaller internal swing where we've come and made a lower low. So obviously it remains, you know, I don't need to tell you that needs to be broken first, but obviously you'd like to see it get out of this trend channel. Okay, but, you know, whether or not the major correction here is over, well, that remains to be seen. You can never really tell a correction's over until it's in the rear vision mirror. But, you know, just looking at this, you know, we're coming into some of this, well, you know, you can just see the points here. You know, resistance, we broke a little bit here, resistance, we sort of supported, we've come back up, and now we're back into this zone where the market was pretty indecisive on the way down and then on the way back up. So I would be looking for this area to hold. If it can't, then obviously we've got a problem. We then start to think about, you know, these sort of areas that come into play down here, which is, you know, a long way away. But hopefully, you know, basis that sort of balance between the rare earth maybe coming back, which is yet to be seen, of course, and just more the pure uranium outlook, then hopefully we can get a bit of traction through here and then start to kick back up. But we don't have that here as yet, and we're sort of just dribbling along the bottom of the RSI. When I say the danger line at 40, that's just a general guideline. You can see here it's just been bottoming out at 36. So I think on this daily, I'd just like to see a bit of divergence, a bit of bullish divergence, which we don't really have yet. We need, to get bullish divergence, we probably need a kick up, you know, and maybe just one more low with, you know, with this just starting to go up and do that. So we, you know, that are the sort of things we'd just be on the lookout for, but we don't have that yet. We just wait and see. But certainly this trend channel looks like it's pretty well in control, and we've just finished on the edge of it again here this week. So, you know, that the outlook is still relatively bearish here. You know, we'll talk about this in a minute and the setup that I pointed out, but, you know, it's not really materializing at this stage. So I think the last video I did here of energy fields, you know, this was what we were pointing to, that we had this nice touch here, and is it going to sort of repeat what it's done here? Well, At the moment, it's kind of failed a little bit, and this is important. A setup is not a guarantee that it's going to rally. A setup is simply that. It's something that gives you better odds, which doesn't guarantee that you're going to be right. Okay, we've had this nice sort of trend that you could sort of draw in like this that we touched, but now we've sort of come back through it. So that's why whenever you're going to trade a setup like this, you would always use a stop. So I don't know where if you took something like this where you're going to place your stop, but you've always got to place it somewhere. Because it's a trade. If it's a trade, you need a stop. If it's an investment, maybe you treat it a bit differently. But if you're investing in this for the long term, well, then you're not really looking at this. I would suggest that you're probably more interested in, the bigger picture, and this sort of stuff is not as relevant. Maybe look at that to add. But if you're not going to use a stop, well, now that's your trading business. But as a trade, well, that looked pretty good, and I would say it's still alive, because if it was me trading this, I probably wouldn't. I mean, it depends on your risk profile, of course, but I would probably be stopping out somewhere below here. So, that's the sort of room that I would have given it. So if I was trading this, then I would still be in this trade, but certainly out of the money. Okay. So, we had a mixture here of news. We had this one where the production of uranium was starting to crank up, but obviously this one was problematic. That the CFO was going to resign, and the market, you can just, the way it gapped, everything was pretty good here when it got its news about, it ran up, but this gap for the CFO has not helped the market. It's still struggling. So there's a gap there that needs to be filled in eventually. But we're just trying to hold this bottom. We've got a sort of a double bottom sort of come in here, but yeah. Gee whiz, you'd want this to hold. I mean, it can still sort of wick through it, but you wouldn't want this to start now doing that, starting to resist that point. That's kind of what I'd be looking at. But just even looking at this on a smaller time frame, I mean, you can just see now that we're sort of stuck in this mini little range here. So we've got sort of these tops here that have just sort of resisted the market thus far, and then we've got these bottoms that have kind of held it. So we're betwixt and between a little bit here. Whether or not we've got some sort of change of character here, it's nothing's really definitive. So I'd just be sort of sitting and watching on this. If you took the sort of swing setup, then you've got your stop in place, and then you'll see what goes. But for now, yeah, this is still pretty weak. So anyway, let's move on to some happier news, and we'll talk about CCJ and 2023, a 90% rise. I mean, that's a fantastic rally. Okay, and we finished pretty close to the high here. So really, we started here at 2023 as we sort of pushed away from this support, and bam, we've gone up really, really well. So a 90% rise in a year, that's a pretty good year by anyone's standard, I would have thought. So now we're even just going back into history, and we start to look at some of the areas that we've breached. So we know we had sort of this area of interest here. Okay, and that sort of tied into a lot of this. So that was kind of one little zone that we were looking to defeat. And now where's the next one? Well, I'd be looking at this before we came in and challenged this. So let's just extend these boxes right to the right of the chart, and we'll go back and see what's happened in recent history. So we just extend those, and we'll just bring this back. So here was the point where we broke through, but we're yet to get to this. Okay, so we're not quite there. We're sort of lying in no man's land, I think, if it's sort of between these two major zones of interest. We're just sort of sitting here, like not really getting enough to sort of challenge on, but we have had a bit of a correction that's gone on through here. So I've talked about this in the last Cameco video, that we had what looked like a bit of a distribution event that was coming on, and I've been warning that the market was going to look to be ready to correct for some time. So now it is undergoing a correction of sorts. But look, we still do, even though we're correcting, and we'll look at that as well, but we still do look quite strong here in terms of the trend. And this is obviously, we're looking at long-term trends here, okay? So we've just come in here to balance. Now, I would just read this as being, when you're between the Tenkan-sen and the Kaizen-sen, let's not extend that, that's just a neutral market, okay? It's just sort of, that's just where its chill zone is, where it just builds itself before it decides whether or not it's going to push on or fail. Okay, I still don't see a major failure. A correction, sure, but not a major failure. Okay, and I'll talk about corrections a little bit more at the end of the video of how, because I think I'm concerned that when I say correction, that people think, bang. Well, that's not always the case. Corrections can take many forms. Okay, but just generally speaking, when you talk about corrections, you think about price returning 50%. But I don't know if it's going to go that far. Okay, we know we've got good areas here, but we'll look at this in an Elliott sense soon. But as it sits here, just looking at the Ichimoku, there's still nothing wrong here per se. It's just we just go through these little corrections where we just correct either time, price, or both, and we make a decision as to whether or not we think it's going to go further down in a correction, or if it's going to start to gather itself, and maybe we get a little Wyckoff style accumulation schematic lining up, which obviously I can't really see anything there yet, but we'll keep an eye on that. So we did have some warning signs here that a correction was building in possibility. We got this double sort of top in a divergent style manner. But, like I said, we're a long way away from where I would suggest is the danger line of this big trend running out. So, we can just look at this and just see if it holds here around this 60 area, even though I think 60 is more prevalent in a bearish market as being the point of resistance. But we did hold here on this last little downturn. So now we're getting another little downturn. Are we going to hold here? The market's kind of suggesting that there's reason to be bullish here, but there's two paths open to price for me, so we'll look at those. So this has been the trend channel that I've been working off, and we have sort of held here in a bit of a double bottom here. This is just on a daily, so this is quite promising. Obviously, though, like energy fields, we've just got this little sort of range here that we need to just make up our minds what we want to do. But the fact that this is held here is quite good, and even just taking sort of the swing, we almost got to 50%. So that's a kind of a nice pullback. I think it's telling us that there's a good chance of a setup here, and I think so it just then becomes down balancing between what you think might happen in an Elliott sense and where we're at. So the RSI on a daily sense is sort of just dribbling along this danger line. But I think the fact that it's sort of here, we don't really have any divergence per se as yet. But I think the fact that it's here, and this has been an area that it held on the last correction, and when I start getting into a pattern sense, I'm looking at this as being the correction. I think that is kind of repeating here. Obviously not exactly the same, but a similar sort of shape. I'd just say, that this one's a little bit sort of flatter than this one was a bit more sharper. But the fact that we're holding here is sort of interest. We've almost sort of double bottomed here, just around this sort of danger area. But like I said, the way I'd read that is that I would see this RSI as being close to, if it's going to maintain a bullish stance, that I would see that this RSI cycle of downwardness is kind of completing here. So that leads a bit of hope here for Cameco that we can rally on. So just thinking about some of the volumes here, I mean, the thing that grabs me here, I'm just coming off the bottom of the last swing, is that just here through this sort of just above the 61.8, we've got no market acceptance. There's been very little volume down here. So I think even though it wouldn't be very comfortable, obviously, if you're long, but if you got a quick wick down here and it bounced back out, once again, there's no willing sellers down here, and the buyers very easily overpowered the sellers. So that would be, and I'm not even saying that we're going to get down that far. We might have bottomed here, but that would just be a point of interest as I look at this last swing that we've got going on here. So I've got two sort of Elliott ideas to present. The first one, I'm thinking that this is not like another wave. This is a wave 4, okay? In a different way of the same sort of thing as this. We've got sort of an expanded flat going in here. but we hit this trend channel. We've got that fib sort of relationship, so that kind of is good. And the other thing too is that if we were thinking about sort of wave fours, well, when we're thinking about this in an Elliott sense, wave 4, we usually look for a bottom between the 38.2 and the 23.6, so we just sort of hit that. And we also look for wave 4 to go into the price territory of wave 4 of a lesser degree. Oh, actually, that's probably more wave 2. But the thing that we've just come down here and touched this fib, and then we've got some other backing up fibs in terms of the 50 here, sort of makes me think, yeah, okay, this has got a fair bit of validity as being some sort of bottom, and that perhaps this stage of the correction's over and that we can then push on. So I have laid out the case for an extended wave 5, which I've sort of looked at in regards to reaching up to some of these sort of targets that have been laid out by other brokers. So I'm not making any sort of prediction there. I've laid out a case for the path of price to get there in an extended wave 5. But we don't know that this is the bottom. We're just speculating, of course, at this stage. However, like I said, there's a few things here that's telling us that the market can hold here, I think. I mean, even just bringing in the daily Ichimoku, this cloud's held very well for we've been above it since April last year. So you can see here in the last correction that we had, that we got down in and tested the cloud, we held it, it was quite choppy, which it usually is inside the cloud, and then we pushed on, and now once again we're in here. So maybe we're going to get a little bit of volatility through this before we can clear, but we don't want to lose this. If we lose that, then that would suggest that we've broken the back of this rally, okay? And if we are going to lose it, well, that brings the other possibility of Elliott into play. So the second count is, I'd kind of look at it like this, that we had 1, 2, 3, a triangle 4, and we've come up for a 5 to make either a 1 wave or more likely an A wave. But if we're going to get the termination of either 5 waves, if we're going to count this as 5 waves up to here, which you can do, you've just got to shuffle it around a bit, well, then I'd be expecting more of a major correction, okay? And then maybe this turns into an impulse and we get something more like this, okay? Now, what I was going to say before is sometimes you'd see wave 2 or wave B come into this range, the price range of wave 4. So that's a long way down. There's going to have to be a fair bit go wrong for that to happen, and it's difficult to see it while the overall uranium space maintains quite a big bid. But in saying that, it could also be a B wave. So, and this is the thing about corrections, right? The price rallies, we can either correct sharply, like this, in a sharp correction. We can sort of rally and then drift down a fair bit lower as we correct price and time, or we can rally and then we just more correct time. Okay, we don't really go anywhere before we kick on again. So whether or not this is going to happen, I mean, that's what could happen here. So when I say correction, it might just mean that we do this for a while and we don't really go anywhere before we kick on again. Okay, so there's different types of corrections. All right, so just when you hear the term correction, that doesn't mean that I'm predicting a plunge. It just means that I think we've just got to either, and this could, like I said, if the first count's going to hold sway, then that's probably the correction before we go on even further. Okay, so like I said, there's definitely a case to be made that we've got a completing correction here. Okay, but we'll need a little bit, maybe another week or two to decide whether or not that's going to be the case. Because if you think that's going to be the end of the correction, then you'd be expecting a reasonably strong reaction to come through sometime in the very near future. Okay, if this starts drifting, okay, and we start losing this trend channel, well, then we'll have to come back and go, okay, well, maybe this is going to be an A wave, and now we're going to get some sort of flat B wave. Okay, like this, exactly like that. I'm not saying in the same magnitude, but just this sort of not going anywhere for quite a long time. And I'm not saying that is what's going to happen here, but that's the general sort of idea I'm talking about. This is more a correction of time. Even though we did correct price reasonably heavily, we just spent a long time going sideways and not doing a lot. So that remains also an open possibility. So where do I sit when I look at this in 2024? Well, they're the two cases, I think. So either we've got, I'll just go back to the other count. either we've got a completion of a small flat in wave 4 here, and then we're going to kick on further and into 2024. Whether or not we go up and get those broker targets remains to be seen, of course. But that is one way we could trade out of this, and the other way is that we're going to correct either price or time, right, or both. So we take a long time to finish the correction, okay, before we come down here. So I'm not, generally speaking, if this was going to play like this, then you would be thinking, okay, well, the textbook would tell us that, a move of the magnitude of 50% back is what you'd be looking for. So, like I said, I've sort of said before that it's difficult to see this market coming back that far. I mean, nothing can be ruled out. Just look at that news that came out of energy fuels with the CFO. So you never know when that sort of thing might pop its head and just upset the apple cart. Anything could happen. But it is, as things sit here and now, for everything that we know, it is difficult to see it coming back that far. So that's why it doesn't necessarily have to come back that far. We might just get a correction that just corrects time. Okay. Now, even the ultra bulls would tell you that's impossible because the fundamentals tell you it's going to go straight up, and maybe that's true. But I have the fundamentals changed from the high, and if they haven't, why has the stock dropped 12%? Okay, so that maybe that's something you can ask yourself. I don't know, but I'm just looking at all this, putting it all together, going, yep, okay. As we sit, there's a good candidate. Which count I prefer, I don't know. I'm still leaning at the first count, even though this count is very much alive. So I'm still anticipating this count. I'm not going to make a prediction about an extended wave 5. That was more just an exercise on how we could put the market together to get here. This is still possible, but maybe wave 5 doesn't get that far. Maybe it only comes to here. Maybe we only get back to that all-time high, and we pause and we come off. So that all remains to be seen. But we know what's up there. This is the count that I'm leaning at. This is what I'm thinking is going to happen. That will now get an impulse up. But that remains to be seen. And if we don't get this and we start losing these lows, we start failing, then we go back to the other count, and that's what we start to base the next year's or 2024's idea off, and we start looking for bottoms of major corrections. So that's where we sit. So thanks very much for watching. That's probably a bit longer than I wanted to go. Like I said, have a great new year, and I'll see you in the next video. Bye for now.